Hi, I'm Dave Brickell, Director of Sales at Paradigm. Welcome to The Big Picture.
Vol is reverting, so the obvious trade is always the expensive one to
this
carry.
whole peak inflation, peak rates narrative, peak Fed, which we've been talking about.
It's an expensive place to find out. Crypto vol, a potentially fatal place to find out.
The crypto option markets are definitely showing some signs of life.
Hi everyone, welcome back to The Big Picture. I'm Joe Cruey, your crypto vol market insider here at Paradigm, and I'm joined by our macro specialist, David Brickell. And for today's guest, super excited to have Lucas and Allison from NOX Bitcoin in Brazil. We've got a ton of great stuff to chat about today, but before we begin, help us out by smashing that like button, hit that subscribe button if you haven't already. We're here every week with some of the freshest takes in crypto derivative markets and beyond. So Lucas, Allison, very excited to have you here. Why don't we get started with your guys' story? Lucas, I'll let you go first. I'd love to hear, how you got into the crypto space, what you're up to at NOX, and just go from there.
Yeah, here in NOX Trading, we have been doing lots of strategies. We like to do cover calls, buy vol when it's cheap, and when it's expensive according to our data analysis. And while the volatility of Ether and Bitcoin remaining quiet in the last 3-5 months, we started to look at the vol spread between the Ether and Bitcoin, right? And here we do lots of research. I am trader and researcher here at NOX, and Alison helps me to validate the points of view. And we have been, everybody have been noticing that the volatility of Ether, relatively speaking to Bitcoin volatility, has remained very quiet. So if you look at historical volatility, the volatility of Ether has remained around 80%, while Bitcoin was 60%. And now they are the same. Sometimes the volatility of Ether is trading below Bitcoin volatility. And we started to get a position on this and to validate this strategy. We also built a linear regression to see if two things: if the currencies, they are in fact related and co-integrated, because you don't want to do a pair trading and volatility spread if the two assets, they are not co-integrated, which means if the returns won't converge again. So we have been trading on Deribit and Paradigm since 2020, and we are using Paradigm to build the strategy. We're looking for straddles, short-term straddles in Bitcoin. So we are building a strategy to shorting short-term and medium-term straddles in Bitcoin and buying, using it as cash flow to buy longer straddles in Ether.
Okay, interesting.
So you're looking for that mean reversion in the vol. So you're looking at that mean reversion in vol for ETH to sort of come back and catch up and revert to its sort of typical premium over Bitcoin, right?
Yeah.
It's pretty interesting because, I totally understand the view, and from a statistical perspective, it definitely does look extremely dislocated. But it's really interesting just looking at the year's flows, right? BTC upside has kind of been the main game in town. Ethereum really hasn't gotten a lot of love, there's been a lot of vol supply in ETH relative to BTC. And it's interesting, despite this, dislocation, if you will, in the Ethereum vol versus the BTC, if you look in the top right, those are the vol spreads right there. We aren't really seeing a lot of guys come into the space to kind of play this sort of mean reversion. I guess what do you think about that, right? There's this element of okay, when something is statistically dislocated, however, you could also make this sort of argument that we're kind of entering a new regime.
Yeah. For example, Ethereum, Ethereum is a different asset when you compare to since the Ethereum has become disinflationary, and since the merge, right? And I'm using statistical data since after the merge, so they're keeping correlated and co-integrated, and the market microstructure, I think it's not different, but what I can notice now, Ethereum produces yield. So what does the people doing? You also discussed it on previous chapter of the big picture that people were doing covered calls and getting Ethereum on Lido or staking somewhere else. So they are doing a double yield passive income strategy. They are shorting Ethereum calls and buying Ethereum and putting them to work on stake. And this is a great strategy when they talk about treasury, about institutional moves. But they became slightly different. But I believe that sometime in the future, due to market cap size, the liquidity and the volatility of Ethereum must be higher than Bitcoin. And people are selling vol. They are selling vol to do passive income. So I believe that I will be on the other side of the flow, because what I'm seeing here, people is shorting vol on Ethereum to gain passive income. The DeFi options vault, they are doing it a lot. They're helping to push down the options price on Ether. But I believe that if the data is not wrong, of course, when you look at the past, the statistical is looking at the past and see how it can help you on the future. But if we don't have a fat tail event, Ethereum being wrecked, Lido being wrecked or stolen, I believe it will reverse. The returns will back again to the mean. We can have.
Lucas, can you just for our viewers? So these two charts that we have on the screen. So from what I understand, you guys ran a regression analysis on the returns versus BTC and Ethereum, and then you ran a statistical significance test on the residuals, and that's the chart on the right. So can you get into that a little bit more, and how that residual now is at a 2 standard deviation below, kind of, that's the point when you should be playing for the reversion.
Yeah, when we just putting it simple, when you run a linear regression, you want to use an asset which is correlated to which one to one, and say, okay, so let's assume that Ethereum is Bitcoin now, and we will have a model. Everything that don't explain this model, the model can't explain every variable, everything that this model can't explain, it will be residuals. So the residual analysis, we take the mean of these residuals and we take the 2 standard deviations. So the assets, they are still correlated, but they have deviated so much from each one that, you know, when you talk about 2 standard deviations, I don't know if Ethereum will become more cheaper than that when you speak in terms of volatility and returns.
Mm-hmm.
Ethereum is too much dislocated, and now it's below 2 standard deviations. So yeah, I think this trade, excluding fat tails, is making too much sense. I don't know if we can stress Ether so much.
Yeah, that 2 standard deviations always the great trigger, right?
Yeah, I will say it's like, I mean, if you just look at the year-to-date performance, like just vol aside, right? If you're just kind of just looking at this trade from a directional view, and BTC has kind of broken out of its descending channel a little bit, and has really outperformed Ethereum generally over the course of the year. So I mean, not even from like a vol perspective, looking at this from a directional perspective, like as a sort of catch-up trade, Ethereum catching up to BTC, I think potentially make a lot of sense. But that being said, like even on Paradigm, we're kind of seeing the opposite trend. So we need to get you guys signed up as a market maker. You guys can provide a lot of liquidity for us.
Yeah, well, it's just great. It's just great to have sort of some natural takers on the other side, right? To all this overwriting flow coming through. Given as well, Lucas, given the positive spot vol correlation that we're witnessing in our markets at the moment, does that then implicitly make you sort of more bullish ETH from a spot perspective over Bitcoin?
Can I answer that?
Yeah, please, yeah.
To be honest here, I think I speak for Lucas as well. He can disagree with me if he wants. So we're both kind of Bitcoin maximalists. So, I mean, we do believe that Ether had more short-term upside. So the perspective here is, well, yeah, let's cash in on the Ether. Let's enjoy the Ether ride. But when we speak like the Ether has more upside than Bitcoin, we're speaking like medium short-term volatility price. I don't, for any maximalist comes here and sticks me with a stick. I don't mean to say that Ether is a better cryptocurrency than would at least that it has much more upside than Bitcoin with medium short term, especially because it had some relevant factors. Lucas told with the merge. We don't think it's this mean reversion we're talking about just means that it doesn't look it has been priced in yet. I mean, all those arbitrage that exist because the market's still like fighting the price for it. So that why stuff is kind of wonky looking, statistically looking. So yes, we do believe there's much more upside for Ether. Also because, I mean, I don't think Ether has the Ether ecosystem as a whole, the Ethereum ecosystem as a whole has done 5% of what it can do. When without even talking like price, mean reversion, the volatility, that objectively speaking, Ether hasn't done 5% of what it can do. And those kind of things tend to develop much faster than, I don't know, adoption for the almost divine entity that is Bitcoin, that just is. But yeah, I said a lot, but the thing is, yes, we do believe it has much more upside in the short, small, medium term than Bitcoin.
Yeah, I kind of I wrote actually in the Macro Pulse newsletter for Paradigm the idea about narratives and the importance of narratives in all markets, certainly in all sort of macro assets. Narratives are huge, and probably none more so than in crypto does narratives matter. And yeah, throughout this year, Bitcoin has had all the narratives. It feels, we came into the year, we had this kind of nice macro narrative, like peak Fed, end of central bank hiking cycles, or so we thought. But as we were kind of positioning for the end of those, and I mean, I guess you had the merge, but then the merge actually sort of brought a level of kind of uncertainty around that. ETH also as well. It's Bitcoin's the only thing that the SEC is calling a commodity, and they're happy to explicitly call that. So kind of just the narratives haven't been there at all for ETH, and then now over the last sort of couple of weeks, this whole spot Bitcoin ETFs with BlackRock and all the institutions looking to sort of come into the space again. All the focus is back on Bitcoin. So Bitcoin's stealing the narratives right now, ETH's kind of just being sort of forgotten about, and I guess it's a more difficult trade than sort of just going along the thing that everyone's talking about.
Yeah, you just kind of look at, when I look at the chart here too, right? Like from a technical perspective, right? Bitcoin's kind of breaking out of this, descending sort of channel, and you have this sort of bullish flag pattern that's starting to form around this 30K level. And, we're kind of really approaching this sort of crucial resistance zone in BTC as well. That 31, 32K, level, which is the level of, looking back around that previous May crash. And, a lot of conversations that we're talking about, or that we're speaking to customers about, they're like, look, now you have this BTC, fundamental story, institutional flow story around the ETF. But then now as well, BTC is kind of sitting at this critical sort of resistance level where, if we can break out, perhaps we consolidate for a few weeks. But if we do break out, the consensus is that we go to, 35, 40K. So it's like kind of all of these things combined. It's, it feels like when we speak to our customers, it's like BTC, 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 especially because I don't think there's no way an Ethereum, spot ETF or, is coming anytime soon.
No, I don't think Ethereum is getting any sort of ETF of sorts. The difference here in between the narratives of Bitcoin and Ether mostly are on, I would say something kind of corny, but it is on the outcome of it. I mean, it's the actual geist of it, the spirit of it. Every narrative you think about Bitcoin, every time you like to think of Bitcoin, which I don't mean even adoption. I mean like use cases or why is it useful, why is it important. All of those narratives are kind of bearish of society if you think of it. If you're like, okay, why is Bitcoin important? Because the government wants to, steal your money. Why is Bitcoin important? Because, USD is going to bust and society is going kaboom, and you better have something that is decentralized and confiscable. So we have those facts on Bitcoin that I actually do believe in. I'm joking, but I do believe in those. Mm-hmm. And I think those are important. But the adoption, but Bitcoin has much more been driven by liquidity as of now, not by those narratives. Yeah. I mean, liquidity is high on the market. People buy Bitcoin because, well, why not? I mean, those narratives are valid. And if you have like excess liquidity, you're going to go into some like more exotic assets just because you can. So Bitcoin as of now has been sort of a, dollar liquidity index almost, especially the last few years. Because the underlying narrative is kind of bearish. You're never going to see something like a bearish society, You're never going to see someone like, yes, there's so much wish for the fiat world to go kaboom boom, so I can. You see, it's kind of a contrarian narrative, and that's why I buy into Bitcoin. But it's a harder narrative to push. Those facts for, like, let's say the ETF or some adoption here and there, while they are short-term, interesting events that bring more liquidity to the Bitcoin market, they're also kind of against the Bitcoin own narrative. But you see a BlackRock ETF, in the end of the day, it's just a means for the US government to have, in the end of the world, I'm sorry for the tinfoil hat here, but it's just another way for the US government to have a little bit more control on this one. So it's kind of against the narrative. So yeah, short term, those things do help, but they do bring institutional adoption. You saw like with the stimulus frenzy in America during the COVID, people were speculating to all kinds of stuff, including Bitcoin and Robinhood or whatever. But those things are above a weaker narrative, let's say for society as a whole, then Ether that provides you like, I can be the world's financial computer. And you can do credits, and you can do that, and it's technology, and you have like NFTs and it's R 2.0, whatever the hell it is. So you can push narratives on Ether much easier because Ether is much more society agnostic than Bitcoin, let's say, and it has a narrative of technological development and empowerment. So the same way I do believe those short-term Bitcoin facts might bring something interesting. For the same reason I buy into Bitcoin, I think all those things Bitcoin still be very much correlated to liquidity. I mean, the whole point of Bitcoin, I mean, not the whole point because of my favorite P2P transaction, but anyways, one of the major points of Bitcoin is save yourself from another bailout for banks or something. So it has a contrarian narrative that I very much believe into. I buy into this. I mean, I got my skin in the game for this. But Ether at any time, someone could say, okay, we'll be running, God knows, some crazy DeFi stuff that does AI, whatever. It's a narrative people buy into much more easily.
Yeah.
And it has a much broader scope. So in that aspect, and sorry if I was a little bit digressive here, but in that aspect, yes, maybe you have some facts here for Bitcoin here and there, like ETF or something. But the macroeconomic scope for liquidity hasn't changed, and it doesn't look like it will change anytime soon, unless we start talking about China, which is a whole other subject. But Ether, on the other hand, even though it's a narrative I enjoyed less because I'm a bit more of a contrarian, it's so much easier to push it. I mean, it's so much more sexy to society as a whole.
There's also the market rotations too. Bitcoin goes up, people start to distribute their liquidity to another cryptocurrencies when we speak about spot markets.
Yeah, of course, yeah, and I mean that's again, I guess like any asset class, you have managers have to wait and carry a certain weight in those baskets. Yeah, you have these big moves, and then you start to see the rotations and what have you. I mean, again, it is quite surprising that we haven't yet really seen that level of rotation out of Bitcoin into ETH, or even. I mean, we saw some of the DeFi alts sort of pumping last week, but we're not really seeing too much of that, which is quite interesting. But the other rotation I've been talking about, because actually I kind of actually think the macro backdrop looks a little bit vulnerable right now as markets are pricing recession risks again. Twos tens curve, is as inverted as it was back in March when the banking system blew up. So I kind of feel like equities could be under a bit of pressure, but actually what we might see is a bit of rotation out of these exhausted tech stocks that kind of were smoking the AI pipe and obviously had a massive move. I think you might start to see a little bit of rotation out of that into Bitcoin and sort of broader crypto. And I kind of actually think that's why it looks like we've decorrelated a little bit from broader risk. As we've sort of seen the pump whilst equities have been a little bit heavier over the last week or so.
Yeah, it comes back to the point. I mean, Bitcoin is still very much a liquidity index.
Institutional can access the easier too.
Sorry.
No, yeah, the institutional can have much more easier access to it too, so better than Ether. Yeah. Sorry, I interrupted you. Your audio was delayed for me. Sorry.
No worries. Thing is, it's still very much stocks suffer, Bitcoin suffer, and stocks suffer because there's no money in the streets. Bitcoin suffers as well. The trade about we were talking about arbitrage and volatility in between Ether and Bitcoin. It's because Ether is very much affected by the same issues as Bitcoin, because it's on the same market somehow. So the liquidity factor for Bitcoin affects Ether as well. However, Ether has this other component that it has a broader use, let's say. I wouldn't say more important use, but I would say a more broader use than Bitcoin. And has an easier narrative. So while both suffer from liquidity crunches, Ether has much more upside on random facts. Let's call it random facts. Let's call it, I don't know, some DeFi development, some NFT development, some AI development, some institutional adoption, something big. So Ether is supposedly, I'm not only talking macro here, not even talking statistics or graph. That also helps, but I'm only talking about objectively on the macro here. Ether is supposed to be much more volatile than Bitcoin. It has more not substance, but it has more attached strings to it. So yeah, I think go back to the point. I mean, stocks will be hurt. Macroeconomically speaking, it's kind of grim. And while it does corroborate the Bitcoin narrative, it just means at the same time it means less liquidity, so it doesn't get necessarily the boost from it. This may hurt Ether as well, but any bounce back or the volatility on Ether on such shocks tend to be higher. Not only because of the strings attached and everything, but also because of the smaller market cap.
Yeah, of course. Yeah, no, it makes a lot of sense. I think the other thing as well, Addison, you mentioned China earlier, and it's something that I'm watching every day, watching this currency move where we're seeing the Chinese yuan sort of depreciate pretty much on a daily basis at the moment. And quite interestingly, the PBOC in China seems to be happy to allow it to happen. And there are parallels. I saw Arthur Hayes writing about 2015 when China debased the currency, and we saw Bitcoin sort of go on a massive ride high. I think it trebled over that time period. But on the currency devaluation story, it feels like they're slowly and he falls off of a cliff, and then you start to see that massive amounts of capital that are in China look to get out, and possibly looking for avenues to get out, and Bitcoin will certainly be one of those.
I'm absolutely agreeing that, and that's the liquidity we might be expecting. I don't expect like the global macro to be better, but I do expect China to long to the read. I do expect China to breathe. I do expect the world liquidity to, as a whole, like increase. China has to devalue.
Yeah,
they seem to be happy, but they have to. They need to export. They have, and also Japan has evaluated a lot. So this hinders China. I mean, if Japan devalues the currency 20, 50, 70%, it's a massive problem for China, because Japan is one of the main competitors, if not the main competitor of China for exports. So they have to devalue that. And I won't get much into the China situation here, unless you guys want to, but it's the liquidity adrenaline shops we may be expecting may come from there. And if you guys may have been noticing as well, and I hope the listeners have been as well, that there have been some movements on reopening or reestablishing Hong Kong as a crypto hub, who have been here since 2015, 2013. Know that basically Bitcoin graphs moved when China woke up. There was always the usual, oh yeah, China gonna wake up, let's see this candle. So China used to have a much more important role in the crypto market, seems to have for political reasons, but for monetary and political reasons, it may come back to have this important role. And Hong Kong has been moving on that way, because if anything happens in China regarding investing in something that is not real estate or Chinese stocks, is going to be happening through Hong Kong. So they can have a little bit more control about it. But you've been seeing Hong Kong making moves in the way of reopening for crypto, and you see that the macro situation for China kind of asks for a little bit of currency printing or devaluating. And how Bitcoin right now is not as bad as it was in 2017 for the Chinese government, because now the USD is kind of bad. So, relatively speaking, it does point to liquidity, to possibly a liquidity boost for the crypto markets coming from China. But then again, we're talking about stuff that decided basically on a stroke of a pen by the party. So, while it does point to that, I don't know. Tomorrow, Xi Jinping might have different ideas, and all we're talking about I'm going to bust.
So guys, talking about talking about obviously China now appear to be kind of turning back towards Bitcoin and being more open. There seems to be this kind of regulatory arbitrage as the US kind of push against it. Others are looking to exploit that. Tell us a little bit about what the playing ground's like in Brazil and attitudes towards sort of crypto there. What's the just what's the kind of temperature check towards Brazil towards crypto in Brazil?
Okay, so surprisingly, in Brazil, crypto adoption is more for people wanting to get exposed to Bitcoin returns. At the beginning, I at this market since 2017. My first job was in a cryptocurrency exchange. My first job, so I'm crypto native, and every client in every crypto exchange, they had their account closed by the greatest banks here in Brazil. And they were always marginalized, P2P dealers, exchange clients, exchange by itself, because the banks were closing their banking channels, so they could not receive reais from exchange. They could not deposit as well. And surprisingly, the greatest bank, they're now pushing regulations. They have a lobby. They already have cryptocurrencies on their apps, so the clients can get exposed to cryptocurrencies, but they can't withdraw, so they can't handle the cryptocurrency. Here in Brazil, we have a very nice community that with people that actually uses Bitcoin, understands the technology behind Bitcoin. We have people doing a great job here, but in Brazil, people, they don't want to accept Bitcoin on their business because it's complicated to deal with. You will have to use a gateway. The gateway will probably charge high fees. So and with the success of Pix is the greatest star here in Brazil for payments. Pix have become social, cultural
phenomenon. Yeah.
Pix is kind of a meme here. So when you want to send money here in Brazil, people don't say, "Oh, I will send you money,
a wire.
I send you a wire, Brazilian reais." No, I will send a Pix. The Pix have become something like money, So I don't see people using their Bitcoin wallet to do some payments. They will use Pix, but I believe that we can use Lightning Network to build a layer, and we can build over collateralized dollar or reais, and people can use it to pay. But Pix so much more easier, and the regulations, and the adoption here is more of a financial basis. People buying ETFs or buying crypto like stocks, to
Yeah. Just to give a little bit of context on the PIX as well. That's a very interesting story. I don't know how much. I think no one is quite familiarized with PIX, but it is
I was going to ask, what is this?
Yeah. It's an instant payment service in Brazil that is run by the central bank. So instead of like sending wires in some countries, PIX is basically each citizen can get a wallet. Guys, I mean, I'll cut the story short here. It's basically a proto CBDC.
Yeah.
It's basically a proto CBDC. They didn't issue the currency itself, but they made the transferring infrastructure. And the interesting thing about PIX is that Brazil has a very interesting thing about the crypto community. It has many old school hardcore guys like from Bitcoin, 2010, 2011. There are people on the Ethereum Foundation that are from Brazil. There are people working on Lightning right now that are from Brazil. So it has a great hardcore community. And back in 2015, 14, I don't remember correctly, those guys, they got access to Congress and started pushing, hey, this is blockchain, let's take a look, let's regulate. I mean, they're kind of raising the flag in the Congress. And the central bank in Brazil it's quite developed. I think no one really knows about this, but the central bank in Brazil is extremely solid. It's one of the most solid in the world. And the guys are real technical. The central bank in Brazil, they solve this lobby push or anything. So this blockchain thing is interesting. We could have massive control on transactions and make it much faster. So PIX was built with a blockchain logic. It's not one of those IBM private blockchain solutions, but it is a peer-to-peer transaction. Works on QR codes. Even you have private keys. It's sort of a blockchain copy that was obviously on the central bank servers. And it is a proto CBDC, and I think it's the first.
And what are you actually sending on there? Is it real? Is it? Yeah.
Money, actual reais. Yes, actual reais. So I don't know how wires work in most of the world. Bank might have bank A, David have bank B. I send you a transfer. Eventually, when both banks settle, via the central bank of your country, presumably in the same country, you receive the money. These usually take a business day. Sometimes they have some agreements in between. They do some graphic compensations, and then they physically settle later. In Brazil, this all happens via the central bank immediately. So you're in Brazil, David, you have a PIX account. I send you a PIX. My bank sends directly an endpoint, an API endpoint to. We actually do have PIX as well in NOX. So we send an API endpoint to the central bank that goes. It's basically a blockchain transaction, but instead of sending a high sending via Bitcoin blockchain, sending to a central bank server, and it immediately gets credited on your wallet on the central bank server. So you transfer the guys. They cut the intermediary of the bank here.
Yeah, interesting.
That is super, super interesting.
This is something that has kind of stalled. This is something that has kind of stalled crypto development in Brazil. The central bank kind of hijacked this transactional innovation, and also there's this thing that Brazil has 240 million people or so, but the average income is very low. So retail in Brazil, while it is massive in volume, in people's volume, it's not extremely it is obviously big. But the private banking clients, let's say the private banking clients in Brazil, they mass for about, last numbers would be 200,000 maybe, when at 240 million people population. They have basically the same amount of money invested money than the whole of retail that the masses for the 99% of the population. So you see, adoption in Brazil by volumetry, you can invest a shit ton of money to go after retail to get about the same money you get on custody if you invest much lesser money for private bank, let's say, for the 1% of the population. So retail has never got this massive investment. There have been some attempts, but they haven't been much fruitful. So yeah, long story short, Bitcoin Brazil, crypto in Brazil in general, it's a thing. People who are, let's say, mid-class, financially speaking, may sometimes speculate into private banking clients. Let's say the 1%, they may have some positions as well. Retail has some shit options, but they haven't been really sold into. And the central bank has hijacked the transactional innovation. Adoption has increased somehow, especially because of the retail banks' efforts to make it an accessible product. When we call it adoption to crypto, that's also two things. One, most of those people have bought into a Bitcoin ETF token, something call it, which is basically a bank selling you exposure to Bitcoin and they're probably just buying futures. They don't have like the full crypto experience. I'm not saying this, I'm not making any valid judgment here on this, but the point is they're not like actively like opening wallets, transferring, getting to know the crypto space. They just open the bank and saw, oh, there's a thing called Bitcoin I hear from, from the paper. Let me buy into that. This is more of a Robinhood experience.
And generally,
so,
are the sort of government, the authorities out there pretty open and pretty relaxed about crypto?
Yeah. It have been tougher. We also had a boom of pyramid schemes and all kind of stuff back in 2017, 18. So there was a little bit of a crackdown on that, but they were mostly focused on the pyramid schemes itself, not on the underlying. I wouldn't even say underlying product because there was no Bitcoin involved, just the name of it. But yeah, other than that, it's just more about money laundering issues. Regulatorily speaking, there has been some regulation has been pushed since 2015 on the Congress, but they're not so worried. So it has been like approved, and then they're gonna set the regulator. It's been moving at a very slow pace. Governments usually either friendly or either don't care generally.
I think that's been a really good conversation. It's really interesting to hear what you guys are sort of doing in the space. Great to hear that we've got a potential, say, natural interest to take the other side of all this ETH flow. And it's certainly going to be interesting to see how that plays out.